Hey guys, if you can think about how you found this podcast, maybe it's on Instagram or TikTok, maybe someone shared it with you. I don't run ads for the show or have sponsorships, so the only way this grows is through word of mouth. If this was valuable for you in any way, my only ask is if you could share this with someone who you think would help their investing journey or business. Thanks a lot, and let's get to the episode. Welcome back to STR Like the Best. I'm your host, Michael Chang. It's my pleasure to welcome Guan to the show. Hi, thank you for joining us today.
Thank you for having me.
Why don't I give you a second to introduce yourself to the audience?
Yeah. Hey, everybody. My name is Hai. I am a day job W-2 work in tech type of person. On the side, I invest in real estate. My portfolio right now has a combination of short-term rentals and long-term rentals. And I've been doing this in the more serious side of the house for 4.5 years.
Awesome. So you're not a newbie, but you've survived the initial wave of real estate investing. I always feel like it's either you did it for 2 years or you did it for 20 years, right? But once you cross the 2-year mark, it's all you've developed the muscles to survive the game. So you have short-term rentals. Tell us a memorable short-term rental story. First one that comes to mind. Don't be afraid to scare the audience. If they get scared, then they're not cut out for this.
The first short-term rental story that comes to mind, I think, is so last year, a partner and I own a short-term rental in Joshua Tree. We have since sold it, and it was crazy. The moment that we listed on market, we were still hosting, and then we had a guest that basically called us at 2 a.m. in the morning saying, "Hey, we don't feel safe here. We smell gas. What can we do?" And we're like, "How is that possible? That's crazy." And they were making a big deal out of it. Started calling the fire department. We started calling the propane tank company, trying to get them to go and help out. We asked them to leave. "Hey, it's not safe. Please go." They're like, "No, we're just going to open the windows, open the doors, and we're going to stay. You got to help us out. We're not cool here." And after 15 calls to a fire chief, which he was very annoyed by, went to the wrong house and then called us back. "Hey, your house is now red tagged because it's so unsafe. The carbon monoxide alarm went off," and stuff like that while we were there. And we were like, "What on earth is happening? Did you talk to the guest?" And then he was like, "There's no guest. What are you talking about?" And ended up, he went to the wrong house and red tagged another house, actually having the exact same issue. Long story short, at the very end, we figured it out. The guests kept complaining throughout the night, never left the premise. The next day, when the propane tank guy actually went there, he was like, "Hey, the tank is empty. I forgot to refill it because I did not realize it was not normal to have used up the entire tank of propane in less than the duration of the winter time."
Yeah.
So absolutely unexpected. At the end, it was a nothing burger, but it was very stressful for sure.
So if the propane tank was empty, how did they?
So apparently, this is how I come to learn about it. When a propane tank, so for those who are connected to city gas and stuff like that, you don't never have this problem. It's on demand, unlimited. But if you're on a big propane tank, in the more rural areas, from time to time, you have to fill it up. And if it's low or if it goes almost empty, it will release the smell of gas inside when you try to use it to just alert you to check on it. That was the whole thing. And yeah, they made a big deal out of it. Rightfully, both sides are.
So it was legit though. They really did smell something. Poor owner who got red tagged on their house.
Yeah, another house got red tagged.
That sucks.
It's crazy.
Sucks for that person. Hopefully, I guess if they had the carbon monoxide issue, then good for them to take care of it. But tell us about your portfolio. You have a combo of short and long-term rentals.
Yes. Let's see. So I currently live, I've always been in the Bay Area, San Francisco Bay Area, and I started in the Bay Area as well.
Okay.
How I got started was actually 10 years ago as the typical Asian parents mentality of, "Hey, you got to own a house." And so I was like, okay, let me try to save as much as possible for a down payment and just buy something. This was 10 years ago. Still to this day, the best investment of anything. And that's how I got started. Hey, you got to buy something, tenants paid down, and in 30 years, I would have a house free and clear. That's the whole mentality at the very beginning. And from that on, you can imagine that becomes things appreciated. That became the piggy bank for cash out refis and HELOCs and whatever else. that serves as capital for the future houses. Starting from that, and then every few years try to buy something. And so a few long-term rentals in the Bay Area, and then pivoted out of state when I got interested in more seriously looking into real estate as a business. Started doing out of state long-term rental investing in Texas, in Dallas area. And then during the pandemic, as probably many of your listeners are, got into kind of the short-term rental game. Like Airbnb was a big thing. So started investing in that as well. Right now, the portfolio is 1 short-term rental in the Bay Area and 3 short-term rentals in the Great Smoky Mountain area.
Awesome. Okay, so let's put the numbers around it. How many short-term rentals, or how many long-term rentals do you have?
I think 5.
5, okay. And then mostly in the Bay Area and in Texas. Tell us about that first one. And it sounds like that first one was the one that like really gave you the running start. Like, what did you like? Is it your primary or is it actually an investment property?
No, it was actually an investment property. It's just a vanilla single family home in an area that hasn't. It's like emerging cities, like none of the more famous ones, and just put 20% down and started picking up landlording. Like know nothing about what I was doing, and I would say got a bunch of like party animals in the house. Ended up staying for 7 years.
Okay.
God knows what happened in between because the house was completely destroyed by the end of it, but that was okay. I was building an ADU at the back when they left to maximize cash flows and all that kind of stuff. So yeah, very vanilla single family investing, no crazy story with that whatsoever.
So how much did you like? So how much was the house when you first bought it?
I think it was like $550K, something like that.
And in ballpark, what is it now?
1 point.
Yeah, Bay Area real estate. Yeah, there you go. Doubled your. You put 100 down, and now you have 600 and plus the pay down, 6-7 extra investment. That's great. And then. Yeah. And the cash flow. And you build the ADU. How much does it cost to build an ADU?
Yeah. ADU was, I think, all in. Absolutely every dollar, every cent all in was $220, I think. $220? It's like an attached ADU. I built a 2-bedroom at the back of it. And now it's a cash flow beast.
You know? Yeah. Can you sell that separately, or is it deeded separately? It's part of the house, right? Okay. But then like it's a separate cash, like that thing, you put 220, like what's the monthly rent on that? Yeah. That's crazy.
Yeah.
It's amazing.
28 at the back. 38 in the front. So
you hit the 1% rule on the ADU, 28, put 220 down, and then 2,800 in rent, and then obviously the front end, your basis is so low, and it enabled. So let's talk about that. It enabled. You're obviously still working, but it enabled that equity appreciation. Enabled you to expand your long-term rental portfolio. Maybe you can just hit on that real quick. I don't talk about that much here, but maybe just walk us through that because I'm interested in the journey of you made a great investment, right? You 7 extra equity, you built the AD, so you got a lot of cash flow and equity tied up there. What was the thought process to be like, okay, like I want to do more here, and then Texas, and then we'll talk about what you did in the Smokies.
So back in 2019, I hit a point of probably a lot of people did at some point of, hey, what am I doing? Spending all my time working at W2. Like I want to do my own thing. Want to break out of the 9 to 5. Don't get me wrong. I'm very blessed to be in the profession that I'm at. Tech pays really well. And in the grand scheme of things, like I'm not doing like hard labor or anything like that. So it's not physically challenging from any sort of perspective. Like that lens is still, it's never lost on me, but it's still at a point where I'm like, hey, feels like I'm just a hamster on a wheel, like just treading, going nowhere kind of thing. So the whole thing back in 2019 was that, hey, I already have some experience, landlording in long-term rental real estates. And it seems to be, one of those things where if I buy early, it's almost guaranteed. You can't go wrong with it. You can, but like time is very forgiving.
Time is very forgiving.
Yeah, real estate is very forgiving in general. So it's, hey, I already have some knowledge here. Let me see if I can expand a little bit more. So that's when I first started getting into the whole, hey, out of state investing, a lot cheaper.
Was it like bigger pockets, or?
It was pretty big influence, I would say. And I read David Green's book, like the long distance real estate investment thing. Oh yeah, it's the whole blueprint is here. So let me try it out. So yeah. And then I do data on as a day job. I'm pretty interested in crunching data and crunching numbers and stuff. So came up with a list of, hey, 10 markets that I would be interested in investing. Did not know any of them. And then I think I randomly picked Dallas. Like I had some criteria for filterings and ranking and things like that. But like ultimately at the end, it's, you just got to pick something. So I'm just going to pick something. And so Dallas, Texas was the thing.
Did you replicate the strategy? Just go buy more single family homes and then do the ADU, or just buy single family homes? What was your metric? Maybe just talk a little bit about, I don't want you to share your secret sauce or anything, but just what did that list look like of good markets to invest in? Because ultimately that's going to, I'm sure that transferred into how you pick the Smokies as well for your short term.
Yeah, so it's very simple. It's okay, some now I don't remember the detail anymore, but like some like historical performance in job growth, population growth, employment growth, like things like that, very
Yeah.
generic things. And then what I was looking for was, what do you call that? Like a cash on cash return of over 6% in a highly probable appreciating market. That's
Mm.
literally my, if I were to summarize it, that's my investment thesis.
Got it. Okay, so basically something just help you carry, like basically just carrying the mortgage and then let appreciation do its thing, or inflation and although sometimes you can say they're the same thing. Yeah, let it do its thing. Okay, cool, awesome. And then so let's maybe transition. So you had how many long term rentals before you went to the Smokies?
5, yeah.
5. Okay, so 5 long term rentals. Okay, decent
Actually,
portfolio.
6. Yeah,
6.
6. There's like a duplex in there.
Okay, so 6 rentals. Some out of state, some in your backyard, and then obviously the pandemic happened. Were you worried about your long term rentals at the onset of the pandemic?
I was worried about them in the Bay Area actually, because rent was dropping like crazy during pandemic because everybody flowed out of California in general. That was actually the catalyst for short-term rental because I couldn't rent out one of my units, which before pandemic was like highly desirable. During pandemic, nobody was renting. Like I was dropping
Where was this in
San
the city?
Mateo.
City?
San
Oh,
Mateo.
oh wow, yeah, no, that's crazy. That would be actually very concerning if you can't get a house in San Mateo.
Yeah.
Rent.
It,
Yeah.
it was 30% lower than my previous lease and like still no bites. And then I was like,
Wow.
I'm not managing this thing for like 30% less revenue. Like it's just not worth it because it's not covering anything, period. Even
Yeah.
before, it was barely covering just PITI. Sorry, just PI, not even TI.
Oh wow.
Um, and so that was
That's
actually
really
the
not interesting.
that was actually the first foray into short-term rental for me. I was like, hey, I heard about this Airbnb thing. Let me see if I can maybe get some practice in this with
Hmm.
this unit since it's vacant and I can't rent it out anyway. Yeah, turned that into a short-term rental, and surprisingly, it did really well. And so that's like the trigger for, hey, maybe I should do more.
Yeah. Okay. Why not do more in San Mateo? Why not? And San Mateo, for folks, it's a city in Silicon Valley. It's like in south of San Francisco. It's by the airport. It's a nice area. A lot of tech workers would find it a very desirable place to live, which is why I was like so surprised that would be hard to rent because that usually is very easy. It's literally a layup. But yeah, why not just grow? Why not just buy another house in San Mateo or rent a house in San Mateo and use the rental arbitrage strategy, especially when
Yeah.
rents are so low?
Yeah. So my whole thesis in real estate, if I were to go back to the original, like why I even got started in the first place, was I'm still attached to this thing of, hey, after 30 years, I own this house free and clear. Like tenants paid it off and things like that. So I actually own it. So ownership is like maybe like the number one principle for why I'm even, doing this. Secondly, it's just way too expensive. Like
Yep.
rental prices dropped like a rock during the pandemic. Housing prices did not move at all. In fact, like it shot way up after like the initial lockdown. It was just cost prohibitive. It didn't make any sense.
Okay, got it. But your basis was low enough before that the math worked itself out for
That one, so I actually house hacked. So I lived in like half of it, and then always rented out the other half. And so that's like how that whole thing worked. And then the whole short term rental thing is just more like a necessity.
Oh,
Hey,
I gotcha.
how can I make it performing in this environment? And short term rental became like an option, basically.
I want to ask, because you're house hacking with STRs, are you married? Do you have kids?
No, I don't.
Oh, okay.
More free from that perspective.
Yeah. If you have a partner or spouse, it's always like an interesting conversation. I've talked to people about that. They're like, I would do it, but my partner is not going to be super excited about that. I mean, obviously, it depends on. With duplex is a lot easier. It's like a completely separate entrance and everything. But I think sharing walls with STR is some may not find it super. In your primary home, and I find it super interesting.
After we've dabbled in a lot of these like house hacks and things like that, my partner and I were actually pretty aligned in that we can actually make, hopefully we can, like any sort of primary homes to also be house hackable, meaning like, hey, we have the sense of how to design, for example, like ADUs, right? Like we built an ADU.
Yeah.
We think about, hey, what are the criteria for buying a primary residence where there's a big enough of a lot and back where like we can section off like a very cute detached ADUs for short-term rentals, for example, that we can manage and they pay for the mortgage and things. It's absolutely doable and could be very enjoyable for people who don't necessarily need every single edge of their space.
That's fair enough. Was it hard to build? And we'll talk about the smokies after this. But was it hard to build ADU, like design and do the whole thing?
It was hard to navigate like the new law. So back in 2020, this is when the ADU build started. California had just passed a law that's, hey, everybody, there's no crazy red tapes. Anybody in the state can build an ADU without like local jurisdictions stepping in and be like, hey, I don't like this. I don't like that. They have a uniform set of rules, except the fact that when they rolled that out, the pandemic hit. And then I was one of the first who actually did it in my city. And like they had no clue. Nobody had a clue. Pandemic was hitting. People didn't know if they can work or not. Like it's crazy. So it was hard from that perspective, but building the thing was not hard.
Okay. Yeah. I figured you're like entitled land. It's a little more straightforward. Cool. Very cool. Okay. So then 5, 6 long-term rentals. And then now you have, tell us how the thought process of, I think you did already, but why don't you tell us the thought process of going to the Smokies?
Yeah, I think it was one of those moving with the herd kind of mentality. I think during the pandemic, everybody was touting the market. Everybody was trying to get in and everybody was basically saying, hey, I'm getting like 40, 50% cash on cash return. And so that's a no-brainer for, at least that's how they advertised it. And at the time, I had no clue what is the Great Smoky Mountain National Park. I didn't even realize there's a thing like that.
Us too.
But yeah, it was more of the YouTuber influence. Everybody's talking about it. Take a look. And we're like, wow, this kind of looks pretty interesting. And that's it.
Yeah. Okay. One of those times when it was one of the best markets ever. Our first deal, I think we bought our first in September 2020, first full year. I gotta look back. I think it was like 80-something% cash on. We literally burned our money out by just running as a short-term rental. We got our equity out. It was a 10 down. It's $560K with the house. Wow. Yeah, like we got all the money out the first year, which is crazy. Just all we own is pretty clear. Yeah, it was crazy because I hear your numbers. It was like you bought the house for 500. Now it's worth 1.2. The house is probably worth 950. Probably ask close at like 925 and that kind of 925, 950-ish.
Amazing. And 3 years, 3
years. Yeah. And no work, right? No, and like a 3% interest rate too. I'm never selling a house because that debt is worth more. Try to get a second or wrap around it. But yeah, like that was what was there. And we weren't even that early. We were like September. And there were people that got in like May, June that were like even better numbers. So we ended up buying 6 there. We bought from September 20 to last one we closed was August of 22. How long? When did you start buying, and when? Yeah, maybe just walk us through your portfolio. When you buy, price, and like how like layout, like 3-bedroom, 4-bedroom, just so people can get their heads around like what you actually own there.
Yeah, we only own 2 properties technically. We started late 2021. We actually started mid 2021, and then like everything was flying off the shelf like immediately. Like as it's listed, it's gone. Like it doesn't matter what it is, it's gone. It's insane. Nothing to buy. Everybody was bidding. We had a property that we put in an offer on that had 60 offers, and then we were like nowhere close to anything. Like literally not close to anything. They didn't even screen it. It was that crazy. So it didn't. We didn't end up getting a property under contract until like late 2021. So that was a 3-bedroom property, like a very compact 3-bedroom in Wears Valley in
View. Is there a view?
Yes, there's a view.
Okay, that's good.
Yeah, I think we just got quote unquote lucky. It wasn't quite lucky afterwards when we maintenance issues and stuff, but like I think we just slipped by. The owner was
How much did you pay for it?
$650.
It's not too bad. How big is it? 2,000 square feet.
18.
Okay, so it's a small one.
Yeah, it's a compact, very compact 3-bedroom. Yeah, so that was the first one, and then a month after we were under contract for another one. That one is pretty interesting. It's got 2 1-bedroom honeymoon cabins on one lot, and I think we paid like $770, something like that for it. So it's like less than $400 per cabin. Okay.
And how have those done? You didn't buy the top of the market. It was close. Probably 6 months out from, I think the top was probably August of 22, like mid kind of Q3 of 22 was like the peak. We actually, so for us, we bought the first one in September 20, and then we figured out how to do off-market deals because just like you were getting shut out every single time. It was like 60 offers. I was like, we're just not competitive. So we're thinking like, what other ways could we do it? So we figured out a way to just like market directly to owners, and I was like lucky we did that. So Just ask them, what do you want? And then if it made sense, we're like, okay. And then we just get it on a contract. Because I knew the market was just appreciating. So if I could lock it in, even like the 45 days to close, like that's 10% appreciation right there. Just given how crazy the market was. And the nice thing was we had time to actually inspect it too. Because we were like, it was like owner to owner. So can we get a week to send an inspector over it? I'll go there and take a look. And they're generally were like really amenable to that. So it wasn't the crazy stuff, right? So I think that was, we were really fortunate because we were at a, although it wasn't like the lowest price, but at least we weren't chasing like we weren't chasing a moving target. And we had time to actually look at these things, and they were all like pretty successful. The one, my problem one is the one that I bought in August of 22. We actually, that one we actually were in contract on that in late or early 21. That was crazy. That was actually like, I think I shared this with you. So it was through a broker, and then it was a new build cabin that was supposed to be built in 6 months. It's months, of course, but it's $3,000 though. That's it. That was the deposit. No construction loan, nothing. It's just $3,000 to lock in the cabin, right, at that price. So $690 for a three. It was supposed to be a 4-bedroom pool cabin. It ended up being delivered as a 3-bedroom, but there was so much built-in appreciation there. Like it was $690. There was a cabin that sold like literally the week before. Very similar layout, like same HOA, for like $850. So you're walking with a good amount of appreciation. And then the builder was like, yeah, take it or leave it. If you're not going to take it, then sue me. I'll sell it to someone else. It was just like, you, and then not safe for kids. I won't say it, but I was just like, but then he ended up giving me a little bit back. And now that cabin's probably, that was the top. Now it's probably like mid sevens probably. I haven't looked. We're not going to sell it. Mid sevens. So like basically net zero, basically like even, because you take, if you sold it with a broker fee, it basically is a break even. So that's been my only problem one. But it really tells you how crazy that market was. Now that I hear, I haven't thought about it in a while, but now that I hear your experience there, like the 60 offers there, it was a nutty time. Now the prices have come down. Like from the top, it's probably down 10, depending on the type of inventory you're looking for, 10, 15. So it's down, but it's not really down. It's down from like the stratospheric level. Now it's like still frothy. Everything is like a 10% cash on cash there right now. Everything I look at is like, if you self-manage, 10%. Now, do you want to you can ride, to your point, you can ride 30 years and self-manage it. You own it free and clear. But then again, do you want to work for, I always ask myself, like, do I want to work for 10%? And my answer is I want to keep looking because I feel like I can do a little better. I'm curious, like, how did you underwrite the deals? Like, you're a data guy, right? Like, how did you underwrite the deals? Did you use their DNA, talk to people to get comps? Walk us through your process.
Yeah, let me see. What did I do? I didn't even use AirDNA. I think I talked to a lot of people about, okay, how much have you done and yours and things like that, and that was it. And like spreadsheets and stuff, like they're pretty intuitive to me, so it's like building them out is not that big of a deal. It's, hey, list every single expense item that you can ever get and add a 10%.
You'd be shocked how rare. I do that too. The bottoms up. You'd be shocked at how rare a bottoms up build is. What? Oh.
I
Do I just put a percentage? No, you don't.
Yeah, no, I get it. I like, it's not everyone has the same affinity to numbers. Some people just literally when they see it, they're like, hey, I'm out. Like it doesn't speak to me.
Fair.
That kind of stuff. I think underwriting might be a barrier for a lot of people. It certainly is not for me, and it doesn't sound like it was for you, probably because of our backgrounds and our previous stuff, I imagine. Yeah, but again, that wasn't too bad of a process.
And then like so do you think it was a little bit of FOMO when you got in? It was like, I just got to get in, or as you look back now, did it set aside the intellectual rigor that you sound like you would aspire to?
Yeah, here's how I see it. I am a ultra conservative person, like super conservative when it comes to like spending money or investing or like predicting what's going to go up and down and put my money on it, place a bet on it. Like I don't go to a casino. I've never gambled or bet on anything. And even for like long-term rentals, when after 10 years, it looks like, hey, fat cash flow, fat appreciation, and I did nothing in between. At the time, it was still like a unsure thing. Like I had to convince myself and like a ton of sleepless nights after acquisition that, hey, have I done something crazy here? For me, it's not so much about, for example, hey, did I hit my forecast with my app and things like that. It is just taking action to do something, and as long as the outcome is not catastrophic, I think I'm fine. It's more of a problem solving phase once that's done. But for myself, getting to do something, like getting to pull the trigger on a property, even after 10 previous acquisitions, I'm still not the most, okay, yeah, I'll just sign my name here tomorrow. So I think like FOMO actually played a good part in me getting more comfortable with that in
Hmm.
myself, and I value that a lot more than I would say, hey, was it 19%? Was it 20% cash and cash?
That's an excellent way to frame it. And thank you for sharing that. I think it's hard to talk about that because I think a lot of people go do that. I'm similarly very conservative with money. We didn't grow up with a ton of money, and it was really nerve wracking to sign the mortgage papers on the first one that we bought. Even though like I made good money and it was never going to be that catastrophic too. Because I think and then you realize like it's never, unless you really screwed up, it's not a zero. Right, you might lose like 5, 10%. You might lose a little bit, but like real estate, if you bought in like a reasonable area, it's not going to be zero. That's the first thing. It's not going to just like like just doing something because you could bang your head against a wall in spreadsheets like for a year and not do anything because
Yeah.
ultimately it's just numbers. You're never going to hit your projections. If you do, like you should be doing something else because like you're that good. You shouldn't be like buying $1 million rentals. You should be buying you should be like really double down on that skill set. But I think that is the biggest thing where most people really never get off zero and they never do anything. And then they just invest in like a random syndication because it's easier. And there's, my capital risk is like 50K or something like that. And those are the worst because you don't know
Yeah.
the GP, you don't know the person putting it together. You're just FOMO with someone else. I've seen so many people lose money on bad syndications. And I've seen people lose money actually on real estate, like buying real estate. I think the reason why is like the bar is so much higher. Like you really got to get comfortable writing that mortgage, signing that mortgage paper versus a syndication. Hi made money on this. Oh, he's a smart guy. And he has the next one. Hey, can I get in? I'll just put in 50K. If I lose it, no big deal. But the 50K really adds up. All those things, that 50K is like a $500,000 house if you put 10% down. 100K is like $1 million house. I think people don't actually realize that. They take I'll just lose this a little bit and then it's fine versus actually why don't I just like actually take action and like really do the work because I feel like you're like that bar so much higher. Like you probably aren't going to lose money on that. Like you're going to like to your point, problem solve. Okay, like you're like say your Salmon Tail house. All right, this sucks. It's not covering my P 30% down. What do I do here? If it's a syndicator, they're just be like, sorry guys, we made a mistake here, and here's your K1 and here's your tax loss. But for you, it's like, all right, what do we do here? All right, this short-term rental thing. All right, let's go IKEA and buy some furniture and let's figure this out. And then you
Yeah.
save that investment. It's doing well. I don't know. I've heard so many of these stories like that. It really resonated with me. Your fight to get it right.
Yeah, exactly. I think that's a very underrated mentality, actually. A lot of people are, for example, hey, I want to get into real estate. So I want to actually do something in that space, especially like a lot of my like tech colleagues. They want to break out. They're probably looking for financial independence or at least some sort of like passive income streams. Maybe not even passive. They don't mind doing a little bit more work if it means their wealth building kind of multiplies. But then the analysis paralysis is always, hey, how do I get started? I have all the tools to get started, but I can't because X, Y, and Z. If you just walk into something, hey, if you underwrite something, if you've done your homework and it looks fine, remotely fine, just walk into it. And when your back is against a wall in the worst case scenario, actually that's a perfect learning experience, maybe painful. And so if pain tolerance is not a thing, that not that person's thing, then that may not, they should probably walk away. But if any people are excited by, hey, if my back is against the wall, and I have to figure things out, that's actually a pretty exciting time to learn a whole bunch of new skills in very short amount of time that especially perhaps like a W-2 worker doesn't actually get the chance to do those. And I always tell people, it's, hey, if you walk into something, there's a bunch of resources out there that can help you. Like if you want to do real estate, I can help you. It just is that one last hurdle of whether you want to jump in or not.
Yeah. People exactly the resources are out there, and if you have even a slight kind of ability to problem solve and feel a little bit of pain and not just crumble and just okay and like have a little bit of resiliency, feel like it's not that this isn't that hard either. Yeah, there's stuff to learn and everything, but long-term landlording is like pretty easy, to be fair, if you can just make sure your tenant has a job. Like I manage some long-term rentals for my father-in-law, and like they have a job, like they legit have a job, you're gonna be okay generally. The problem is like letting people that don't have a job. It's, oh, my cousin's paying it, my uncle's paying it. And in short-term rentals too, there's so many resources out there. You might not be like the A+ player in the beginning, but like if you work at it, like you'll get there. Like there's a lot of resources out there, and a lot of communities. Like Hi and I, we're in a Slack group that I was invited to from another guy that I met at a conference 2 years ago. No, sorry, a year ago. And I've learned so much from our Smokies channel, especially like the vendors. Like who are the good vendors, who are the crappy vendors, and just see people talk. So I think just a long way of saying, if you do something and then you like enjoy it and you have a little bit of problem solving skills, like it opens up all these different worlds to you. And what I like terming it's the unknown unknowns, because it's, you're W2, you know your day job, and you know, okay, I don't know this thing, but I know someone else knows, whatever. But it's the unknown unknowns that make life interesting. When you walk into a situation and you didn't know even existed, and you're like, oh wow, what's this? Oh, this is really cool. And then you bring your own like experience and mindset into that, and like you develop your own solution. I find it also like the coolest situations for me, like that with short-term rentals and now like social media, like doing podcasts, like things I just never knew existed. And it just feels like it makes your life like interesting. It actually makes your day like very interesting. Like, oh, I didn't even know that. It's like, okay, let me dive in here. What's cool about it? What's not? Yeah, I highly encourage folks to, if you're listening to this and you're interested, like Hi and I are not anyone special. Like we just took action and not figure it out, but like just problem solved and waiting for the next problem to solve, and you're just gonna figure it out.
Yeah, learning is definitely, at least for myself, learning is what kind of makes life interesting, I would say. Just keep learning new things. Part of the reason why I even got into real estate in the beginning was like, hey, like W2 there's not much learning. Like I've worked, with four different companies, basically doing the same thing over and over again. And like I already know what the end is. And it's just, okay, I just have to redo this whole thing at a different company, hoping they would take off. But at the end of the day, it's especially for the ones who are still like W2 doing a day job kind of stuff and feeling stuck. It's doing real estate for me has actually had the reverse effect of making interesting again, because of all the problem solving skills that you have to figure out. For example, so I just type in front of a computer, right? Like to my mom, that's all I do. I type in front of a computer. But in short-term rental management, you have to deal with guests, you have to deal with cleaners, you have to deal with handyman, you have to deal with a whole bunch of like repairs, maintenance, marketing, all that kind of stuff. So you're like your CEO, CMO, COO, everything. When you pivot that mindset back to I started to get very opinionated about how my teams are run, how if people are doing their job or not, or like how we can actually help the company to be better. And it opened up so much things like that. Previously, I was just confined to my function, like my functional profession, which is data, and had a whole ton of opinions about like products, design, marketing, and things like that. And then like probably not coincidentally, people start taking you more seriously. Hey, this guy knows what he's talking about. Let's invite him to more stuff. And yeah, it's got the reverse effect on like W2.
That's cool. Actually, I never thought about that. You brought the owner mindset to your job, and you're being rewarded. Like people reward that when they see someone else helping them think through problems. Like, oh, okay, wow, I actually thought through something that I had helped me do my thinking. And it's cool that managers love that when they have someone that works on their team that helps them think, problem solve. It's, oh man, I love you.
Yeah,
that's great. Absolutely. I love it.
And for those who manage a team, like there's a lot of parallels as well that you can draw from managers to managing employees, cleaners and stuff. Like how do you make sure everybody is aligned and stuff like that. I think that's probably one of the areas that's the least talked about, and I've actually never heard too much about, because most people, when they get really successful at real estate, they pivot out, and like W2 is like the fastest thing that they run away from. And I think for those who are like, I still like my W2, there's actually tangible benefits to help you do your job better.
I love it. I love that. Dude, that's a really great angle. That's a really great angle. I hadn't even thought about that, actually. I probably wouldn't have been better at my actually, now I think about it, I probably wouldn't have been better at I definitely would have been better at my job after going through this experience. You learn to think as an owner. I think I would have been better actually with my clients, actually, because I was in finance. I was working with clients in investment banking. They were like doing deals and everything. But it was like now thinking more strategically about, I think for me, like just thinking more strategically about stuff versus like being in like a very finance, this is my swim lane, I'm just going to do this. But now I think about business in a very different way. It's not about, it's actually funny because if you're in banking, it's like very much, oh, did we hit 20% or did we hit 19%? And actually in the end, for business, it actually doesn't really matter. It actually doesn't matter. Now, you don't want to be that far off, but everyone knows this is not going to be right. It's just, okay, if A, B, and C happens, or if these are the levers and they do this, then this is an outcome. But it really is like, how do you like strategically think about a problem? And you really build those muscles when you're like doing it for yourself because you're forced to. And then, and you can really, I think, accelerate your career progress. If you like your job, accelerate your career progress. I actually really I didn't hate my job. I liked my job. I just didn't like the hours, and they just owned my life. And I was like, your clients owned your life. I was like, you sound like a better work-life balance. For me, that was just not, it was like 100-hour weeks all the time. I was like, I just can't do this anymore. It's too much.
That's pretty rough. Yeah, no, I
so
think the
much.
mindset enables you to call your shots. Hey, if you don't like the company that you work at, that's fine. Like you can walk away. But what they cannot take away from you is really, hey, now you have the ownership mindset. Now you are beyond what you're hired to do. And
Yeah.
you can have for example, like I was nervous as hell like talking to our chief product officer, for example, for a long time because I'm like, hey, I don't know product. I just do data here. Now, not now because of all the changes and stuff like, but now going into any company, I don't care what their pedigree is. I don't care if they founded like $1 billion companies and stuff. I can have a true conversation. It's, hey, how do you, because like in the whole short-term rental space, right? You own six and you have many arbitrage properties and stuff. Your net worth is tens and hundreds of mine, for example. And like, I should be nervous talking to you, but I don't because we're just like we're just exchanging ideas and stuff. And I think, at least for myself, previously, that was a huge barrier to have a normal conversation with the higher ups or with the people with decision making power because I'm always afraid that I don't know their stuff enough or I don't know the business enough or the stuff enough. Now that quote unquote I own a business, it's just that. It's, hey, as long as you're curious, as long as you have a little bit more inquisitive problem solving mindset, like everything is just normal.
It's a story. Yeah, no, that's yeah, exactly. That's I used to. It's funny. I used to be like very shy too, especially like when I first got my job. Like you sit around people more senior than you, and be like, because you're just like, scared of saying the wrong thing. And actually, it's just like really bad. It's really bad actually when you sit in a meeting and don't say anything, even no matter how junior you are. Especially being asked the question, like you really should have a view. Because they're like they're judging you actually. If you just sit there like a wall, if you sit there just like wall art, and then you'll be treated like wall art. Actually, you'll be like, oh, take notes and send me a summary. You don't want to be that guy. You don't want to be that man or woman. You want to be like, what's your opinion? What's your view on it? I think part of it is changing that mindset of one, not being scared. Two is the emperor has no clothes. Generally speaking, they don't know anything either. Trust me. No matter what, they probably don't know anything. They're probably just focused on other things. And if you can bring value to people anyway, just bring value to people in a thoughtful way. Obviously, don't say something stupid and ill-conceived, right? Oh, based on my experience, like I saw this. This is my view. Whether they like it or not, they're like, wow, you're like 1 out of 100 people on my team that actually had a view, and it was like not scared enough to tell me. Like you're automatically going to be in that 1% or that 5%, and it just serves you well. Yeah, that's a great. Anyone listening to this, it's a really great mindset to have. Thanks for sharing that. That's So, folks, as we went on a conversation, what's your plan for 24? What are you still looking to buy? Prices are still relatively high. Rates, call it 6.5%, 7% right now. Short-term rentals, I think we had a dip last year. I think it'll be fairly solid. Like year over year, I think it'll be flattish, plus or minus a point or two. I don't think it'll be a step change. What do you like? How are you looking at the world right now?
Yeah, I just did this exercise like maybe like a couple weeks ago. Effectively, in the whole short-term rental space, I want to own, let's call it like a portfolio of 4 or 5 short-term rentals. I'm not interested in scaling beyond that. I have no interest in building an empire or anything like that. But I am interested in, for example, owning 4 or 5 that can make some money and that we're pretty proud of in terms of the properties themselves across different markets. And like right now, I would say like the Smoky Mountain properties, we got in because of the fact that the return seems good on paper and we were in it for the money. But at the end of the day, like we don't care about the Smoky Mountain area. Like my joke to people is that, hey, there's a lot of mountains in California that looks more impressive than that place. Like I think it's just one of those things that the market doesn't truly resonate with us. And right now we're doing it for the fact that I like the cleaners that we work with and the professionals around there, but nothing else. I don't think we would ever go back to stay there or vacation there ourselves. You can imagine a portfolio of things that we really care about. And then the strategy really is, hey, we're going to swap some of these properties into those things or start acquiring properties in those different markets that we want to be like spending time in, for example. And then we'll just work our way to that one rental at a time, one swap at a time until we get to 4, maybe 5, and that would be it.
That's great. Lake Tahoe, be careful.
Yeah, we're not. Yeah, we're okay from that perspective.
No, that's great. No, I think that's good to point out. Like there are other considerations besides cash on cash, like something that you'd be proud of, something that you can show your family, friends. There's a social aspect to real estate too, right? Like when someone walks into when you go on vacation and you can invite someone to your second home that you're very proud of, location that you're very proud of. There's a lot of benefits to that too, especially when you're working, especially when you're still that matters, right? Like how you're perceived at work, what you own, how people perceive you, how successful they perceive you, your business acumen, all that stuff. All that matters. So there's definitely other considerations besides cash on cash, especially when you're not like a full-time short-term rental investors. Me personally, like I'm a full-time STR investor. So like those are important. Cash on cash is still paramount. Cash on cash, and when we buy appreciation, those are paramount.
Yeah, that's your business. So yeah, there you go. You're doing what's needed, or I guess what you signed up to do.
Exactly. What are you optimizing for? That's always my default like question to myself. What am I optimizing for here? Because you can do things in like a bunch of different ways, but like fundamentally, what's the key problem you're trying to solve here? And then I think that drives like the execution plan of what you want to do. So my traditional closing question I always ask everyone is: business is a team sport, and we wouldn't be where we are without others helping us along the way. What's one of the kindest things that someone's done for you to get you to where you are today in your real estate investing career?
Yeah, it's so I had a business partner like initially. I didn't bring her up in this whole show. We actually partner on the guest story at the very beginning, the Joshua Tree property. She was the one that got me into real estate. Sorry, short-term rentals actually. She was the one that's, hey, you can't rent your house out. Why don't you think about short-term rentals? Like I built an ADU and I did a short-term rental with it. She helped me design the thing, and like lots of like gratitude to her for kind of just showing me the path. She was new herself to short-term rentals, but I think together we were pushing each other to be like, hey, you want to really go into this space? You're really good at design. And then she was like, you're really good at numbers. You're really good at operations. Want to partner up? And so I think now we all have our own portfolios and stuff. But without her, I don't think I would have started in this space.
Well, shout out to her. You should share the episode when this comes out. You should share the episode with her. I think it's always nice to hear you talked about and a person talked about it in a certain way. And I think just to pull one point from that powerful story is having a partner with you. Whether it doesn't have to be your spouse or partner, or life partner, but just like someone, a family member, someone you meet on Bigger Pockets, just having a community around you that is doing something similar. And I think it really, one, you don't feel like you're alone. Entrepreneurship can be lonely, that you have someone that you can talk to that understands your problems. If you talk to someone that is just a good listener, it's great to have someone to like offload to, but if they don't really understand what you're going through, like it's helpful, but it might be cathartic, but it's not like super helpful because they can't give you any feedback. I think it's really helpful to find people around you, find a community around you, whether it's Facebook, Bigger Pockets, whatever community that you can find that can help you along the journey, because that accountability is really going to get you, help push you along, and seeing other people successful, not FOMO, but just knowing that, like, hey, hi, is this like me? We have the same job, same situation. Like he can do it, like I can do it. And I think a lot of it's just like believing in yourself and having someone to believe in you and to help people get off zero and do something. Thank you for sharing your story today. I really appreciate it. If folks want to reach out to you, someone wants to reach out to you, what's the best way to reach you?
Yeah, they can find me on Instagram. It's just my name, Hai Guan, Haiguan. And yeah, I'll be there.
Perfect. I'll put it in the show notes. Hai's Instagram handle, so definitely follow him and send him a DM. I'm sure he'll be happy to make some new connections around the Bay Area, other investors. Hai, thank you very much for joining. Really appreciate you sharing the story.
Yeah, no, thank you so much for having me on.